welcome to PriceIsKing.com weekly update on the markets, on the futures. We're going to get started. Before we do that, I'd like you guys to hit that like button, hit that subscribe button. It helps me grow this channel. I really appreciate it. Let's get right into it. We're going to talk about oil today. So we're going to start with oil, as this is something that I started talking about a few weeks ago when the whole market was changing a few days ago, and with this whole war that's happening in the Middle East right around this area, I was like, hey, you know what, this is probably a good time to get in. And lo and behold, look what happened. Boom, it's shot up, right? I think it was in the 80s. It never made it. There was a lot of support in this area, but then the war happened, and next thing you know, it just shot up. As you can see on the oil, we're looking at somewhere around the next stop is in the 90s. Then it's going to start going up over to 91 and going to try to make it up to the upper band on the Bollinger. Then it's going to try to hit the upper portion of the the fib numbers. Excuse me. So having said that, look, we see the MACD, we're showing some green. The mountains are coming up. It's crossed over the zero line. That indicates that there's some more pressure upwards, and with the ongoing war, that's going to continue on its trend up. We're definitely going to look at another couple of dollars before, and then who knows, it might even go up to the $100 mark. That's possible, but that's what's happening. But definitely on its way up to 94. It's targeting this area. To keep an eye on it, look out for it. That's where it's headed. So if you're into it, there may be some pullback, just profit taking. So just be mindful of that. You have some support over here. You have the mid-band support. You have the 50-day moving average support. There is any pullback is a means of just kind of going long again, and just because of what's happening overseas. So this will continue. All right, so keep an eye on that. Let's go to the next one. Let's look at the Dow Jones. Oops. So what's going on with the Dow? A lot of things, right? I mean, the past couple of days, the past week, we've seen substantial volatility, and with volatility, you're going to see a downward pressure on the markets all across the board. What I see right now, and what we discussed, look, it touched the top. That was a really good resistance point right over here. Let me actually zoom in so you guys can see the last few days, as to see what really happened, what's going to happen in the next few days. Look at this. It's continuing a downward pressure. You had the lower high, the lower high, the lower high, right? And you had the mid band being breached. So it's below the mid band, so it's reaching for the lower band. There's a crossover that's coming, likely to go further down, and this cross could happen this week, next few days. And when that does happen, look, the market hasn't opened today, not yet at least. It will open in a few hours, give or take, and when it does, we'll see. You'll see some more downward pressure, and as that happens, you'll see this mountain actually being crossed over below, and you're going to see the red mountains starting to appear on the daily charts. When that happens, there'll be some profit taking. It'll try to go back to the previous bars high, or even halfway, and then continue to go on its way down. So just be mindful of that there is some pressure. It's below the 50-day, it's below the 200-day, it's below the mid band. The next support area that we have is right around here, the 33026 number. So if it does try to go anywhere, it's going to try to go ahead and hit that before it tries to make itself go back up on the Dow. All right, so that's what we're looking at. If we wanted to go look at the fibs, I don't think I have the fibs on this. Let me add it. Actually, not 1 minute. 4 year, 1 day. Let's go take a look at the fib. All right, so let me do, what do we got here? This is on the way farther outside, right? So if we're going to look at it from this perspective, the 23.6 is where it's trying to touch. It's a critical number, right? So it's a good support area. It will definitely try to hit this area, make it support, and then try to run back its course on its way back up. Now, this is very dependent on the earnings season, right? We got the earnings season. You're gonna have like the Santa Claus rallies and whatnot, right? In the next month or so, we're closing in on the end of October. So be mindful of all of that, right? If you're gonna be in this long term, you have a lot of support. Watch your risk. You want to be able to protect. If you're going to try to take longs, don't just get in, wait for an opportunity where you see possible of support and then enter those longs. Don't just blindly get in, especially, you know, with everything going on. You want to be mindful of where you get on your longs. Just don't get in. I think you got a whole bunch of red candles here. If you are going to take some longs, possibly right around this time would be an ideal area. But then just be mindful of your risk. You know, watch how much risk you want to take, how much, you know, sometimes you may have to hold for a couple of days, maybe a week. In that case, you know, don't just get in on any longs just because you see that there was 3 red candles. There could be a 4th red candle that could start out as a red candle and end up as a green candle. Right, so when that does happen, that's when you would actually look at for longs. Let's look at ES. Let me zoom in on the last few days. All right, so similar situation, but look, on the MACD, we've already started to see the Red Mountain candles below the MACD. We've already been below the, you know, zero line for some time now. There was a cross period right around here which brought it up for a few days, but because we're still below the zero line, this cross made it, you know, virtually impossible to looking for longs, right? This is going to continue downward, and so their momentum is there still for pressure on the downside. Now the downside will bring us back all the way over here to the 23.6 on the fibs. So you know, you've again, same situation, below the 50, below the 200, below the mid band, everything broke, bears are in control. This could possibly, you know, be a support, but because there's no other real support, I mean, it has this right here, which is getting very close to being a support, but I just don't see it being an ultimate real strong support. Just because all of the other numbers are up above, and you got the fib protection down over here, right? So it's probably going to gravitate towards that. The next real, beyond this, the next real support is this, which is below the fib line. Okay, and this is all dependent again on earnings, right? A lot of this stuff will drive the price going downwards. And as you can see, you got a bunch of red candles, so there's going to be some breathing room for profit taking, and then you'll see an upward, those fake rallies that I like to call. The overall amount, you know, you're looking at lower highs. So you look, there's a high over here. You had sort of anomaly, right? I think this was a lot to do because of the transition in the futures, but again, it never actually kept going up back to the previous high, right? And so went down, had a profit, boom, kept on going, had the lower high. This lower high didn't try to even break the previous, and then boom, splat down with the war and everything going on. Now you got support here. The next support line would be over here. So if this breaks, then boom. So you know, if you want to go long because of all these red candles to take a profit, that's definitely possible. Now the only thing you just have to be mindful is your risk. How much risk are you willing to take? Can you bear, you know, 200 points? If you know that's something that you can bear. I don't like to do 200 points. That's a lot of points on the ES. So that's something not recommended, right? Watch your risk. If you are going to get some longs, get out when you see an opportunity where the trade is going against you. So that's what's going on the ES. Let's take a look on the Nasdaq. The Nasdaq is showing pretty much the only difference, pretty much the same thing. The only difference on the Nasdaq we see is the 200-day is down here. Okay, we do see lower highs, lower high, lower high, lower high, lower high. Okay, and that brought it down. You see a whole bunch of red candles. You got a support over here. You got another fib support over here, the 38.2. Below that you have the 200-day moving average. So this is a good area again for taking longs and watching your marker, watching your risk marker. Where do you want to take your risk? Certainly, you know, this is going to hold because you got, not only do you have this support, but you got the lower Bollinger Band support right in this area that could hold it in. When that holds it in, and if it does, then you're going to have some few days that it'll hover around the 14.838, you know, that area right here. So, and if that breaks, you're looking at going towards the 200-day and the fib markers. Okay, so the fib is right around, what do we got, 14.367. So on the downside, looking at another 300 points support, and then if that breaks, then we're looking at leg down over here, somewhere around here, because that's the previous like a marker, and then the next would be around somewhere here, and then you get the fib. So you know, bears got a lot to do here. If the bulls come in based on earnings, it could take it up back to the mid band, back to the 50-day moving average. And if that does happen and it doesn't break, and then it's going straight back down. Okay, so keep that in mind. Watch what's going on there. All right, so that's the three indices along with oil. I'm going to take a look, and in this video today, I'm going to show you a quick look at some of the stocks. I know, you know, they're getting a beat down. For example, you know, the big names, right? You got the highs, you got a lower high, you got another lower high. It's getting a beat down. It's about to cross. This is Microsoft. Okay, we're looking at Microsoft. Now it's got this big red candle, a lot of support. Next leg down would be 309. Okay, you got the 200-day, the lower Bollinger Band. You got this cross that's looking like it's about to cross, and when that happens, boom, it's going to go on the right. You see this downward angle. Although I did notice that this right here crossed the previous high on the mountain. I like to call them the mountains. Okay, the green mountains, the red mountains, and you notice that it did cross over here. So you know, this may be a false pretense, and then you know the earnings could be really good, and then it could shoot up. But if it crosses, you're looking for downward pressure. This will continue down in the red. So be mindful of earnings. see what's going on, and take it from that perspective. But I think, you know, in terms of long-term play, if you can get in on a 309 area, you know, it's pretty a solid stock, I would say. Let's look at Apple. You know, you see the overall upward trend. I talked about the 250-day moving on one of my other videos. Make sure you check that out. It gives you an indication of where the stock is going overall. You got the lower highs, the lower highs, the lower highs. You got the cross. We're below the MACD. The cross is happening. Support broken. Next leg is down to 171. When that breaks, it's going to go down to 169. I would ideally like to get in around this area. Okay, if you're going to go long, you want to go in this area because you got a lot of support here. You got this also needs the support. Okay, so all these new iPhone sales, if they come short, it's going to continue down, and then, you know, in preparation for the next quarter, you know, you're looking at possibly getting in long here and then exiting around 185. Ideally, this is where you want to exit if you're going to get in long over here. Okay. And the reason why I'm saying that is, look, there was a lower high here, but then you had a higher high previous to that. And this is my reasoning behind why this area could be a good support area and where we can get long. Although you have this cross here, you got this downward pressure. I don't anticipate this one, you know, going into the 160s, you know, like down all the way over here. If that does happen, then by all means, you know, watch your risk, get out. Okay, on the Apple. And then the infamous Tesla. Right. Bad news all around. You know, earnings didn't go that well. The earnings call didn't go that well, and that's why you see this garbage right here, downward pressure from it. You breached everything: the 50, the mid band, the 50, the lower band, below everything. Right? It even like crushed the previous low. So, you know, I would say if you're a really long-term investor, possibly a good idea to just buy right now. I don't see a reason why this is not an opportunity to get in on the long. Okay, this may be just a double bottom right here. You want to get in and then look on this. I didn't add a fib on this. I don't think it makes sense to add a fib on this because it's just so volatile, and it really doesn't work the way a traditional stock does. And you see how it's been doing, right? Like, just it's been sideways. You know, you got the low over here. I can't really, I mean, even if I were to go to low as $16, it just doesn't make sense. I don't like the way this trades. One thing I would tell you, like if you're looking at the RSI, right? What would I do here? One of the things that I look at in stocks is, look, if you had a high over here and then the next was a lot less, then definitely going in short. Right? And you had a high over here, but the next one never made it as high, definitely going a short here. Okay, so that's something to look at. I mean, I didn't point that out on Apple, but take a look at Apple. Right, you had the highs over here, but then in the next one didn't make it. So, and then you saw what happened right on the stock. All you need to do is take a step back and look at it from a higher picture. If you're a long-term investor, look how overbought this condition was right on the stock. And then the next time it came back around over here, it didn't go as high, and so it kind of established itself. And next thing you know, boom, it went down. All right, so there you have it. If anything, I mean, I always like to look at Planeteer as well. PLTR. This stock is pretty awesome. I think it will find its way back up above 20. It's just a matter of time. You got this cross happening, so downward pressure below the 50 is going to happen pretty soon. It's going to go down over here to 13. If anything, you got a lot of support in this area. If you want to get in, I would say get in around the 14s, and then if you're a short-term trader, week, 2 weeks, intraday may not work as well. But if you're doing a swing trade, possibly a good idea to get in around here and then exit around 17, 18. This may be a buying opportunity. Long-term investors will definitely do really good with this stock. With that said, like and subscribe. Thank you for watching. Really appreciate you going ahead and hit that subscribe button. Price is king. See you.